the disruptive wave of what has hit the telecom sector in last couple of years needs no introduction. But is the disruption behind us? Where is the sector headed? Where is the profitability headed? If consolidation is the new mantra, will consolidation really help the sector per se? So in what could be called as a rare interview, I have with me the top management of Voda-Idea Limited, Vodafone Idea Limited. So Balesh, Akshaya, gentlemen, thank you for joining us. You have decided to talk to us at a time when everyone is curious to find out that what is next in the telecom sector. Last 3 years have been disruptive. They've been bad, they've been ugly, and they have hurted the shareholder. Next 3 years, what is the guarantee that it will be better, and why it will be better, and how will you make it better?
Good question. So very clearly from where Vodafone Idea sits, new company, a merger of number 2 and number 3 coming together, very strong sets of credentials. So whether you look at the infrastructure present already, largest set of spectrum, pool of spectrum, well invested 2 networks in the country, fiber networks, our presence across the country, 2 very strong brands, 387 million customers and 200,000 enterprise accounts, 2 very strong brands. So great set of credentials to start the company with. Of course, the parentage of Aditya Birla Group and Vodafone Group. So we got all that it needs to create a great company. We started with that. We believe the market has a huge amount of potential still to be tapped. So underpenetrated market, you've got 1.3 billion people with only about a billion active SIM cards. But when you look at double SIMming, multi-SIMming, etc., you've got at least about half a billion people who haven't got their first SIM card. So you have an opportunity to grow the category, and that continues to happen. You've got within the billion SIM cards only half using data. Other half will get into data. So create opportunity to get them to use data. So glass half full of a growing glass. You've got category that can grow, and within the category data that will grow. We are best poised for that because the non-users of data, say 2G users, we have 46% market share between one of my 2 brands. So great opportunity to be able to handhold them and take them up. We are bringing the 2 networks together, creating the strength of that to be able to create a great customer experience and also to bring great profitability. Why? Because there's 2 of everything in terms of cost, reduce that, bring the synergies in. There is 2 networks, bring them together with the spectrum that I talked about, power up the 2 networks and create a huge amount of capacity, therefore coverage and customer experience. So very clearly drafted strategy to fructify that, and we're heading towards that. For us, very clearly the priorities in front of us are integrate very quickly so as to be able to get customer experience to come up, profitability to come up, the partners to have good time with us, so bring in all kind of digital ecosystem partners to come in with us. Of course, contribute to the society by creating the digital India and assisting that, and for our people. The 5th P for us is people, and our people should find it as a great place to work. Already both Vodafone and Idea were, and Vodafone Idea will be a great place for the people to work.
Okay, so I will not argue with any of the points, but ultimately the big picture is strong. We both know that. The challenge is that how will a telecom company and shareholders benefit out of this entire big picture? Because there is a disruptive wave of price drop. There is one large player who's looking at market share and not profitable growth. Your numbers in terms of the financial performance are telling you that margins are hurting. Is that passé now? Next 3 years, will there be a significant improvement, or there will be just an incremental change, and the disruption what we've seen in the telecom industry, it may reduce, but the intensity will still remain?
Look, Nikunj, 1.3 billion people market with 3 private players and 1 BSNL, great place for everyone to be. I talked of the potential that's still untapped and therefore growth potential from there, even at current market prices. So when you develop your network in terms of coverage and capacity, take more and more customers up the data usage curve, there has to be a growth coming in for everybody, even at the current prices. Then when you look at the pricing, it's a category which is limited by nature. So there's only so much spectrum, there's only so much capacity that can be created. But there's an unlimited demand. So in a category with a limited supply and an unlimited demand, you're selling below cost. This is unsustainable, and this is against any law of economics. The reason it's happening is obviously beyond economics. However, you already come to a consolidation to the best level that it should. So it's an optimal level of competition with 3 private players and 1 BSNL in the play. All 3, or actually all 4, are burning cash. They're all cash negative. So this is not sustainable. This has to turn around, even on the pricing. But pricing is not the only growth I'm talking about. When the prices go up, yes, of course, there's growth. But even without that, current prices, as data usage goes up, there is growth potential. Plus, there is so much of adjacencies, neighborhood industries that are opening up, where telecom has a role to play, directly or indirectly. Your strategies could be different to fructify that. However, whether it is retail or content or fintech, etc., there is huge potential for telecom companies to play, and we've got clear plans towards that as well. All we are saying is we will not directly do all that. We will focus on what our core is, give our customers a great experience, use the analytics to present to them the best offerings that the world has. Rather than creating them ourselves, we will bring it through partnerships. For instance, on content already, we have partnerships with Netflix, with Amazon, with Z, with Hoichoi, with Sun TV. We're soon announcing a partnership with one of the biggest music players in the world. We will not make it ourselves, but we'll bring it to our customers.
Okay. Now, there are two challenges for the company. One is the business environment, which I would imagine will not change tomorrow morning. Second, what you've managed to fix with the right issue is the financial challenge, the hole in the balance sheet. The view in the market is, and again, this is not my personal view, market view, which I've got from some analysts who try to give that this is good, but this is not great. This is more like a band-aid approach. Even though it's a large capital infusion by two large promoter groups, this will only take care of 5-6 quarters of problem. That's it. Is it true?
Nikunj, I don't agree with that statement.
Why is
and
that?
let me explain how. So I think when we were in October, November, when we decided on this rights issue, the initial thoughts about having a capital raise was actually of a smaller size. And then the shareholders and promoters felt that at this point of time, we need to raise sufficient capital so that this question of whether the capital is adequate or not goes out totally. And with that intent, we came to a size of 250 billion of equity raise, which, as you would say, that is about the largest equity raise by any private company. Now, let's say from our perspective, why do we say it is enough and we will not need more capital? There are some figures I can share with you and some figures which I can give you kind of guidance, not guidance in terms of figures, but qualitatively. So let's say in October 18, when we kind of decided on this plan, we started with a cash balance of 136 billion on our balance sheet. The equity raise will bring in 250 billion. We've already announced that as Indus Towers merges into Bharti Infratel, the Indus stake which Vodafone Idea has, that will be monetized, and that is worth about 55 billion rupees today. So all in all, if you look at these three items, this is about 440 to 450 billion worth of cash available for the business, which is available soon. Now, beyond that, if we look at operations, we have an existing operation which is generating an EBITDA. We've already talked about EBITDA improvement coming from cost reduction. One of the ways to look at it is that, really speaking, if you say that, and I mean, Airtel is a good benchmark to see that they are at a certain size of operation. Vodafone and Idea actually were two companies with somewhat similar size of cost structure. The cost structures were not very different. But when number 2 and 3 come together, they inherit a cost structure. Most of the synergies that we are planning for today is just deduplication of that cost. So at a higher revenue figure and the cost structure which will be same for a similar sized organization, there's no reason why our profitability will be any lower. But it'll take some time to get there. When we had done the merger announcement, we had said that these synergies will be realized in FY23. But however, between the time the merger was announced and the time the merger got consummated, we had a lot of time to plan for this. And so now we have accelerated these synergies to be realized by FY21. That is one part which will enable the cash generation from operations to improve. The second part is we are making large investments in capacity creation, and that was one of the points which we mentioned earlier, is that probably before the merger we were a bit constrained in terms of making the investment in coverage and capacity, because then that would have probably become a waste after the merger was completed. As soon as the merger has been completed, we have accelerated our process of finalizing orders. Integration process on the network has started, and that will now give us a significant capacity increase. And I'll come to the investment part later, but let me just talk about so when we create more capacity, we are able to migrate more subscribers from low ARPU plans to a higher ARPU plan, because that is a function of capacity. As subscribers migrate to higher plans, that provides a revenue upside. and that is not dependent on the market price increasing, which we believe is inevitable and will happen. So I'm saying we have a base EBITDA, we will get EBITDA improvement from cost reduction, which is just a deduplication of cost, and we will get EBITDA improvement from subscribers migrating to higher price plans with higher capacity being available to us without any improvement in the market prices, which is a later on. So these will give us additional cash. The last item of cash which we are looking at is the fiber monetization. We have got about 1,56,000 kilometers of fiber. We have taken in steps to divest that into a wholly owned subsidiary, which then becomes a vehicle for monetization, and we are taking steps to see that that can be monetized. That is a large asset. So if we take all this into account, we are very, very adequately funded, and I do not see us needing any further capital for the foreseeable future.
So just to clear the air, even if prices don't go higher, the steps which you have indicated, the 3 steps, that's enough to take care of your cash flows for next 2 to 3 years.
Sure.
Okay. I mean, hearing this word that price, Balesh, should go higher, it's not going to sustain. Who's going to blink first? Somebody has to blink.
Look, we already have a premium on our price in the marketplace, and we've been, gross additions or subscriber additions not been an issue. My challenge is more my coverage is limited or my capacity was limited, and which improves very critically. Who's going to blink first? So we are already at a higher price. Any opportunity in the marketplace to take the prices to a right level, because it's below cost right now. Coming to a higher level, we would more than be happy to be driving in that direction. Very clearly, our focus is to ensure great customer experience. We know the price at the kind of pricing it has gone to is kind of now irrelevant even for Indian price levels. So share of wallet is very, very small now. For the kind of offerings that we are making, I mean, unlimited usage of voice, unlimited usage of messaging, practically unlimited usage of data, practically. So with those kind of offerings, prices should go north, and at that price, customer, if he gets a good experience, is actually happier than having a poorer experience at a slightly lower price. So we are clearly therefore focusing on saying, let's get the experience right, let's get the coverage and capacity right. Again, also we are very clearly focused in geographical play in terms of where and what.
Can you be more descriptive on that?
So Nikunj, what we are saying is, look, the industry always looked at itself as circles because that's how the licenses were given. So people were saying, this is my strong circle, this is my weak circle, here I invest more on getting spectrum, there I don't. Now it's become pretty much across the country the same set of competitors, and everybody's got spectrum. So we lead the spectrum pack, but there's enough for everybody everywhere. So it's pretty much a uniform playing field across. What we are now saying is therefore go a step, a granularity level lower. Rather than looking at circles, we are looking at district level. Okay. When we plot the 658 odd districts that the country has, very clearly we've got markets, so we plot them again on potential versus our market share or our extraction from the market. You see markets which have got great potential and we are strong. Okay. And then you see market where either potential is low or we are not very strong. This is within the circle's districts. So every circle would have districts which lie here or here. When I look at it closer, the right hand side half, which is about 303 odd districts, give us about 90% of our revenue and a big chunk of our profits. Okay. The left hand side gives us a much smaller part of our revenue, actually is profit negative. So what we are saying is we have this opportunity right now. Everywhere there are two networks beaming, my Idea cellular network and my Vodafone network. What we are saying is on the left hand side districts, we shut down the smaller of the two networks as quickly as possible. Okay. Use that spectrum onto the bigger brand. Therefore for customer, it's only getting better even on the left hand side because your coverage is that of the larger brand. You've used both the spectrum's created capacity. You're taking one cost line out. So two revenue streams, one cost stream, take them to EBITDA neutral as quickly as you can. Whereas on the right hand side, we retain as many sites as required to keep the most resilient network. And here is where, Nikunj, we put the future technology investments like TDD, massive MIMO. We're rolling out humongous capacities to ensure that the customer experience here is as good or better than anybody else. Okay. Now these are markets where we have strength. They're on the right hand side, so there's my strong markets. My customer market share here is much higher than my data market share because I'm a late starter on data. Now when I create coverage and capacity and customer experience that I'm talking about, I look at taking my data market share higher by incremental users of data that come in. They go in line with my market share. My existing customers with my one of my two brands, great customer experience, so they stay with me. They start giving me data usage and ultimately ARPU. So my customer market share and my data market share come closer, my revenue growth comes. So left hand side, focus on stopping the bleed. Right hand side, focus on growing customer experience and therefore getting your rightful share of the market.
When you marketed the right issue, what sense did you get from your existing shareholders? Because the decline in the stock has been almost a vertical fall. I mean, 100 rupees become 30 rupees when the right issue came out. What sense you got from them?
So generally everybody understands that this price decline which we have seen is hurting, this loss of value is hurting everyone. But everybody also understands that the current way the valuations are, they are hugely discounted. They do not reflect the fundamentals and the opportunity that the industry has to offer, particularly considering the fact that the market has consolidated and the current differentials is not based on a cost advantage that anybody has. It's not that somebody is making a profit at these prices and others are incurring losses. Everybody is incurring losses. This cannot sustain for long. And so everybody believes that story, that the timing may be a little unpredictable, but it is inevitable that the prices have to improve. But just to come back to the original point we made, we are not depending on a price increase, though we believe it will ultimately happen. But investors do believe it will happen, and that's why they're interested in the story.
You got a good response for the right issue when you went out.
Very, very good response.
Is it okay if you tell me that when the right issue was announced, did you get interest from new shareholders?
Yes, very much.
Because they think that right issue has
I mean,
some
not when the
attractiveness
rights
in this.
issue was announced, but when we were meeting investors generally, communicating our strategy, there was a lot of interest from people who were not shareholders.
So you talked about a very large monetization, a very large stake sale. What would be that number which would... So let me rephrase my question. Your EBITDA numbers, what they were for FY19 and what they would be for FY20 and 21, they would be dramatically different because the benefits which would kick in. How does a shareholder understand them? I understand the strategy, the stake sale which is at play, monetization is at play, but you got to tell us that how will it be different? I mean, how will these numbers dramatically look different?
So it's only directional that I can be telling you, and directionally clearly.
Will they be better? Will they be really good? Will they be really higher?
No, so directionally we're getting all the building blocks to do a much better revenue gain because you're creating 4G layer and creating capacity.
What is stopping you from giving me a quantifiable number here?
Because I cannot be giving you a guidance.
Okay, let me try and address it to the extent we can. So let's
Of course,
say,
that's my whole idea.
let's say to the extent we can. So let's say if you look at our Q3 numbers, our annualized EBITDA was about 4,500 crores. So that is a given figure. As I said, we cannot talk so much about synergies in specific terms, but this is largely a deduplication of cost. If you will look at competitors with a similar size of operation, you would see that the cost differential that we have with them would be broadly on an annualized basis in the ballpark of about 10,000 crores.
Okay.
Now, whether we achieve it or not is your judgment, but I think that is the extent of cost differential. One of the points which I think sometimes investors get skeptical about is because there are so many of these global mergers which talk about synergies, and those synergies tend to be slightly in the air, hypothetical, that we are a larger scale, we'll negotiate better. I think none of our synergies are that. Our synergies are just saying that we had two overlapping organizations, so we had a duplication of network, duplication of people, duplication of distribution. This is largely duplication. And for a similar size organization which has existed as a single organization, that is the best benchmark to see where our costs could be. From a revenue perspective, let me just address the investment and probably then that could... our capex guidance for FY19 and 20 is 27,000 crores. As I mentioned earlier, till the time our merger was complete, we were a little constrained in making investments. But post the merger, so in the first 9 months, our total capex has been 7,000 crores. In the remaining 15 months of the 2-year period, we are looking at new equipment purchase of 20,000 crores, which is going to be significant in terms of capacity creation. Second thing which is happening is that we will be able to create more capacity by redeployment of equipment which were lying on our 70,000 roughly sites where Vodafone and Idea were present on the same tower before the merger. As we remove this equipment, this will create capacity at new sites. This equipment is worth about 6,200 crores. So this is not going to be expenditure but will create capacity. The third pocket of capacity creation which we have is that on the remaining 130,000 sites roughly, where either only Vodafone was present or only Idea was present. Each site is currently using spectrum of only one party. Now, as we combine and integrate the networks, each of these sites will be able to use spectrum of both parties. That will give a significant increase in capacity, and as we roll out TDD and in many cases massive MIMO, that will create capacity. What this enables us to do is to roughly migrate, let's say we have about 100 million subscribers who are 4G or broadband subscribers at higher ARPU levels. Our total subscriber base is 387 million. So there's this large base of 300 million who can be migrated, or a large part of them can be migrated to a higher ARPU level. Generally, the ARPU differentials which we've seen with subscribers who are on non-unlimited plans versus unlimited plans could be in the ballpark of 100 rupees ARPU differential. Now, how many subscribers can be migrated and how many can give that additional revenue is a question of judgment. I don't want to get into that. All that I'm trying to say is that both from a cost perspective and a revenue upside perspective, there's a significant opportunity even without price increase, which I keep repeating is inevitable, but we are not counting on it.
Okay, now I just wanted the clarification. Thank you for that answer. So a couple of follow-up questions. In next 12 to 18 months, would you be able to monetize your fiber network and the stake in Indus?
So let's start with the stake in Indus. There is an integration process, you know about Bharti Infratel and Indus. There we have an option when the integration comes into finalization to either take stake in the new entity or take cash. We will opt most likely to take cash, which is currently valued at somewhere between 5,500 crores to 6,000 crores. Obviously varies with the formula that's there on basis the Infratel pricing. So that should happen, and that's well on its way. We're looking at it in Q1, but give and take, that should come.
So the one transaction in this financial year is coming for sure.
Yeah, that
This
will
one's
definitely
for sure.
Sure.
What about the second one?
Second one, once we've done the rights issue, we're not in a tearing hurry to. However, we're progressing well on that. So we are in the process of asset separation. We're in the process of getting the regulatory approvals to create the new company with the assets. Once that is done, we start the process for finding the best opportunities in terms of an investor coming in, or in terms of looking for whether there could be a JV somewhere, or could be an opportunity to look at various ways of rectifying that. But we will take our time and do that. Will that happen in this financial year? We're pretty sure that should also happen in this financial year.
Okay. When you planned the merger a couple of years ago, has the intensity of competition surprised you? I mean, 2 years ago, we never thought that the competition and the intensity would be this high. And you know, two large players coming together, the industry should have consolidated, price hike should have happened. That I'm thinking is logical economics, right? But are you somewhere surprised with the disruption in the competition intensity and one large player trying to disrupt the market? Are you surprised with your assessment? 2 years ago, were you sure, or you admitting it now?
So 2 years ago, for sure, we were not factoring in a sustained below cost price sale environment. And that for sure is obviously hurting everybody around. As I said, everybody, all the players are negative on cash. So it's not helping really anyone.
Okay. How do you think this merger could have been done differently when, in terms of getting better synergies?
Well, in hindsight, if this could be done a couple of years earlier, then that would be that much better. But again, it's a great opportunity. We got great set of assets, great outlook on the marketplace, clear strategy, and now clear funding being created to fructify the strategy.
It's been great interacting with you both. Good luck for the right issue. Thank you for joining us. And I'll take a key headline that the pricing hike is coming. When? We don't know, but a price hike is coming.
And at what gradient? We don't know, but very positive that it will come.
And no market share, high focus on profitability.
Customer experience and therefore profitability.
Okay. Appreciate your time, gentlemen. Thank you for joining us. And for the moment, it's back to the studio.